Hello and welcome to this edition of the video market update from Orbex.com. Beginning with the hottest event of this week, the first round of the French election is now behind us. And the most important thing for at least for me, and the most satisfying thing is that basically the public polls were finally right, which eases the risk and the possibility for the far-right presidential candidate Marine Le Pen to be the next president of France. In return, it seems that the market is basically very sure, and it's clearly pricing in a huge defeat of Marine Le Pen in the next round of the election next week. We saw a strong rally in the European equities across the day, with CAC 40 rising by more than 4% at the close. Also, the DAX 30 is back to fresh all-time high. The euro also managed to open with a huge gap higher, along with other euro pairs rising by more than 2%, around 109.30 against the US dollar. However, traders need to be very careful and very cautious over the next few hours and days, as we should be some selling pressure to cover those gaps in the euro pairs, at least before the ECB decision later this week. I would not be interested also for the time being to trade before seeing the gap to be filled once again. But the major event of this week remains in Europe. The ECB decision will be announced on a Thursday, which is likely to have a notable impact on the markets. The estimate basically for the time being points to a start of the QE, or the tapering of the QE of the ECB QE, cutting the QE by around 20 billion euros back toward 60 billion, down from 80 billion euros a month. This is according to the previous statement of the ECB last month. Such decision is already also priced in, and this is a very important thing. However, since inflation in Europe and across the board is rising faster than expected, and even faster than the ECB estimated, the ECB might be forced even to take further actions along with the tapering process. One of the actions that the ECB might even take in this decision to raise the deposit rate, which stands at minus 0.4%, and there is a possibility to raise it between 10 and 20 basis points toward minus 0.3 or even minus 0.2. Such decision would keep also the strong bids toward the euro pairs. With addition to that, also there's a possibility to break, or for the euro to break above this week's high, and may even test the psychological resistance, which stands at 1.10. Yet, if the gap is not filled until then, or until the ECB decision, I would stand aside and wait for the gap to be filled before even deciding on any other trade. Moreover, the ECB press conference will be remains the key, as always, as we will be looking for more clues and more information by the ECB Chairman Mario Draghi regarding the next possible move over the coming months. Therefore, try not to overreact. Even if the ECB also decided to raise the deposit rate, the gap is likely to be filled first before deciding also on your next trade. As for the second round of the French election, of course, we will cover it also in our next week's video, but for the time being, let's have a look at our technical charts. Beginning with the US dollar index, as always, and basically this is the weekly trading gap, or the daily chart on the US dollar index, and we can see definitely the gap that basically happened over the weekend, and we closed last week around the 99 or 99.97, almost at a 100, but we opened the day sharply lower, almost like at 98.79. So we have like at least a 100 point of a decline in the US dollar index. However, we still have like the same pattern on the daily chart. So we tried even to break, or the US dollar index broke through the gap has led to a breakthrough the 99.14 support area, the one we saw back in March of this year, and continued all the way down again, like all the way to 98. However, so far we're still within the same area of the support area, which is the 200-day moving average, also on the daily chart. That's a very important level to keep an eye on during this week, and also the falling wedge, which is 98.64. This level should be watched very carefully. But for the time being, as I said before, the gaps must be filled in the next few days before the real move may occur over the next few days. So the general outlook remains also bearish as long as it stays below the 100 for the time being, and even below the 169 and the retracement, Fibonacci retracement, the one that we noticed, or the one that we talked about over last week. Going into also the euro, I need just to show you the trading gap that we saw in the euro over the weekend. that's the trading gap of the euro over the weekend. So we closed the last week at around 107.26, and we opened the week higher at around 109, 108, sorry, 89, but we reached all the way up to as high as 109.35, and at the same time we actually we traced all the way back down, and the 200-day moving average for the time being is actually acting as a support area on the daily chart. However, I still believe that we might see another leg lower all the way to cover the gap before the upside trend resumes. But for the time being, the trend remains very positive, remains very bullish, and we still believe that we might even test the one spot 10 over the next few weeks, especially if the ECB decided to start the tapering process and even to take more measures. As I said at the beginning of the video, raising the deposit rate is highly possible. So for the time being, I just need to see a recover of the trading gap before we continue all the way back higher, or before even entering any trade. Going into the other pairs, which basically we're going to start today with the Aussie, or sorry, the Kiwi. The Kiwi is basically still trading within the same trading range over the past few daily sessions, and at the same time the 100-day moving average is very heavy, and at the same time it keeps or stopping even the pair from breaking higher. However, at the same time the trading gap was very little over the week or over the weekend. But at the same time, the technical indicators are heavily overbought, so we might see again, as most of the pairs are likely to cover their gaps. I still believe the Aussie and the Kiwi will be under pressure for some time, but unlikely to break below the trend line, which basically right now could be around, for this week at least for the next few days, around 96.34, 96.20. That would be a very good sign to start buying again. As for the Aussie again, the trading gap is still not filled yet. It's almost filled, but still a little bit. But at the same time, it's supported by the 200-day moving average and the 100-day moving average on the daily chart, which is pretty important. At the same time, the daily chart, as I said before, as I said last week, we have a double bottom formation, which basically opens the way for further gains ahead, probably toward the 50-day moving average, which stands at 76.11 for as of today. Which is Monday, but at the same time, don't expect the Aussie to drift more lower, or higher, sorry, anytime soon, because at the end of the day, the Reserve Bank of Australia is likely to cap any rally. The dollar yen also actually recovered from its 200-day moving average, as we noticed, as we said also last week. That 200-day moving average is a very important level to keep an eye on, and this is the daily chart. Also, the 61.8 was very near, but actually the pair was trying to break lower, but the 200-day moving average managed to keep the support, and the dollar yen actually began the week higher, also around 110, but at the same time it traded back all the way to 109.75 for the time being because of the trading gap. But at the same time, the technical indicators are slightly positive, which basically opens the way for a little bit of more upside ahead, to retest the same level that we saw at the gap, at least, which is around 110 or 110.47. Therefore, I still believe that we might see some sort of another perk higher, but at the same time, I would be interested to see the test of the 61.8% Fibonacci around 107.79 over the next few days. The British pound, it surprised it was surprising last week because of the political situation in the UK. The Prime Minister actually decided to hold a general election in June of this year. This basically was considered as a very positive for the British pound, and it actually perked higher all the way to 128.90s over last week. But at the same time, since then, it was unable to break above that resistance, which is the former support back in August of 2016, and this is why basically we started the trending slightly lower. But this might be a flag before another rally. The British pound already closed its gap, or you'll see already on Monday. A little bit of a retracement to the downside, probably toward the 200-day moving average again, or even above that. Maybe we will see. I would suggest 126.80s before the before the upside risk continues. And right now, actually, the view of, or the outlook, is basically very strong for the British pound until at least until the elections. Finally, the gold and silver. Gold reached actually all of our targets, the one that we mentioned in our previous reports, almost 1290. Gap lower this week, but it's still the same issue. We're still looking for another perk higher in the next few days, all the way to 1300. That will be our new target, as long as it stay above the trend line, which is right now stands at 1230s, 1230 or 1225. At the same time, as technical support is, or technical retracement is more likely toward the 200-day moving average, which would basically, I would be interested to buy around those or now that level 1255 for another perk higher toward 1300. Finally, this silver has also failed to break above last week's high. We actually broke above last week's high just very like for a short period of time, and then it continued all the way back lower on a little bit of stronger dollar back in last week. But at the same time, we still believe that that silver will also follow gold in the next few days, as long as it stays above 1730. I'm not really concerned, even though that we broke below the 50 and the 200-day moving average. But this is the gap, and on Friday it was supported by those two moving averages. Therefore, I still believe the silver might even make it higher in the next few days, especially that technical indicators are closing to being oversold. This is it for today. Thank you for watching, and you can, as always, follow us on our social media sites, go to Facebook and YouTube to get the latest economical news, reports, and analysis. If you have any questions, also please leave them below the video on YouTube, and I'll try to answer it as soon as I can, or maybe in our next session or in our next webinar. Thank you for watching. I'll see you once again next week. Have a good one.